Good afternoon, everybody. This is Kirk Spano. It is Thursday, June 2nd, 2022. Just about 2 weeks before I go off to the World Series of Poker and go a little bit radio dark on you for a little while. But we are today going to take a look at some buy ranges for the various core ETFs. I am constantly trying to simplify this and make it more actionable and easier to use. So to that extent, I did lay this out a little bit differently. You still have the tactical cash asset allocation, short-term market outlook. You already know I expect the whole year to be choppy, and I think we get a pivot to the upside late in the year, and mainly because I think the Fed backs off. You know, for 3-4 months, I told you from the minute the Fed said they were going to tighten, I said that it wouldn't last long. What they really were trying to achieve was to prick the bubble in the stock market and the real estate markets, which were clearly developing, and to pull inflation down a little bit while we waited for supply chains to move, for inventories to get replenished, for there to be a little bit more oil, and for the rejiggering of the energy picture to become a little bit less stressful. And what we've learned is that the energy picture is probably going to be a little bit tougher to conquer than we had previously thought, mainly because the Saudi Arabians aren't really playing ball. Now, they pulled forward 1 month of production increases, which were already scheduled. So they pulled forward 1 month, split it up over the next 2 months. So essentially what they did is they took 3 months of production increases and pulled them into 2 months. And they had a very minimal effect on pricing of oil. And of course, what we really know is that the price of fuel has gone up, not so much because of a shortage of oil, but really a shortage of refining capacity that matches the oil that's available. In the United States, we have plenty of light sweet crude. Here's the problem. The refineries require a lot of the heavy sour. That's just how the refineries are set up. That's how they were built. There's not an easy way to change those. Over the last decade, they have essentially made those refineries as light, sweet, friendly as they could, and there's just a limit without having to rebuild. And nobody wants to rebuild because, as one of our subscribers sent me today, an article that said the sales of internal combustion engine vehicles is in permanent decline now. If I can find that, I'll actually put it up. There you go. Permanent decline. I've been telling you that this was about to happen for 2 years, and that the sale of cars that were EVs was going to surpass ICE vehicles by the end of the decade. Of course, today we got another gigantic announcement from Ford, which was exactly what I told you would happen over the last year or two, which was they pulled forward their EV and hybrid plans. So I've always told you 2026 and 2027 were the pivot years for the auto industry to shift to EVs and hybrids. And why was that? It's because of a big change in the rules in the United States, mainly the CAFE standards for mileage. But also now you have the pressure from Europe because they don't want to buy as much oil anymore from Russia. Well, the only real way that they can not get gouged by the likes of OPEC is to just start using less oil. So you have all of the components of our 4-step process in play here. The secular trend is towards sustainability and cleaner energy. You have government policy towards more sustainability and clean energy. At the fundamental level, the companies are shifting their capex in that direction. And as people start to believe it, as they start to wake up, the technical signals will be there. And I think that the technical signals are very, very close. One of the things that I had here is just a whole nother screen. And I have some headlines that I wanted to go through with you, right? They're talking about fuel shortages that could be pretty severe this summer and maybe even in the next year. Why is that something that would prompt cleaner energy? Well, if people believe that the price of gasoline is going to be high, they're going to want EVs. Well, here's the problem with that. Right now, we don't have the components for EVs or the metals. Almost do, but demand is outstripping supply. And that's why the price of lithium went through the roof on the spot market. Now, something you have to understand about lithium, you have contracts and you have spot market. The difference in price is, double. So if you already had a contract for lithium, you're paying way under the spot price. And most of the producers have those long-term contracts with Albemarle and some of the others. So when we look at this transition, this huge secular shift to sustainability and cleaner energy, you start to put together the pieces and just say, look, by the middle of the decade, 2025, 6, 7, you have more mines, you have more processing capacity for the metals, right? You have battery technology that sounds like it's going to cut in half the cost of a battery. The CEOs are saying it, the tech people are saying it, the engineers are saying it, Elon Musk is saying it. So over the next 2 to 3 years, it could be kind of tough on gasoline. And during that time, people's psyches will change. All the people that were drill, baby, drill, more oil, more oil, more oil, will start to realize that maybe that's not what it takes. A lot of people are just going to buy EV because they're like, I don't want to pay 5 or 6 gallons for oil. I can slap a couple solar panels on my garage or my roof, and I can charge my car. I can take care of my house, and I might even throw off a little bit of extra energy. Although the utilities are only going to pay you a wholesale rate going forward, right? There's no huge incentive with the utilities because we can't burden the utilities because we need them for all the people who can't put solar on the roof to produce clean energy themselves, which they've been moving in that direction too. So we are going to have this 2 or 3 year period where gasoline is probably going to be more expensive, but the EVs are still going to be a little bit too expensive too. So for the next 2 or 3 years, we're going to have an energy situation where it's a little bit stressful. Now, could the price of oil spike to 170, 180, 200? I guess for a hot minute it could. But even the Saudi Arabians and OPEC know that there's only so much pressure that the consumer can take. So you have the Fed putting pressure on the consumer because mortgage rates are going up and interest rates on credit cards are going up. Although I will tell you, ahead of what's going on with the Fed and a potential recession, the banks are giving away credit on credit cards to anybody who's worthy. I've gotten 11, 9, 4, and 2,500. One was an increase. I've gotten like $25,000 of credit line increases in the last couple of months. So I was like, oh, they're not going to charge me interest for a year or 18 months. I'll throw something on there. I'll pay it off in 12 or 18 months. I don't know how that plays out, but if the last cycle like this pre-financial crisis is a harbinger, that means that we're going to have a recession to quell inflation because that's the only thing that the Fed can do to slow down inflation. So if it sounds like I'm getting a little bit more hawkish on inflation, I am. Not that I think it's the end of the world, but as I've said over and over again, I think we're going to get a whiff of stagflation for a quarter or two, maybe for a whole year, maybe for a little over a year. It won't be forever. The financial crisis only took about a year and a half. And most people only remember the last 9 months because until the stock market crashed and people started losing jobs in the summer of 2008, they didn't get it. But really, the financial crisis started, in the spring of 2007 when some of the big hedge funds with Barclays went under. And last week or 2 weeks ago, I think it was, when the cryptos were going under, when that stablecoin went under, we saw some real bad things in the repo market. Same as in the summer of 2019. So a lot of these things under the surface just keep happening over and over cyclically, right? A correction, an overcorrection, an overshoot, an undershoot. It is just the nature of the beast. We very rarely settle at equilibrium. In 2014, 15, 16, I wrote an article on MarketWatch that basically, I think the title was something along the lines of A Strange Equilibrium. And it was because we never settle at equilibrium. We go through it. We're always aiming towards it, except when we're running away from it. Then we get too far away, right? Standard deviations, get far away from equilibrium pricing on whatever market it is or stock it is. It doesn't matter. Everything's priced, right? Prices shoot too high. They come back down towards equilibrium. And everybody goes, hey, look, it's the right price again. And then it goes below. And people are like, oh, why'd that happen? and then price goes up. Hey, we're back to equilibrium. And then it goes way too high. Oh, wow, I'm the smartest guy in the world. I'm rich. And then it crashes, right? We go through equilibrium. We overshoot over and over and over again. And we try to conquer the business cycle, but it never really works. The reason being is that there's just so many moving parts that if somebody can find an advantage, a way to make more money than they're really supposed to be making at equilibrium pricing, they'll do it. And OPEC is doing it right now. They know that until the demand for oil starts to flatten a little bit more and then finally turn over, they've got pricing power. And that pricing power is going to last a few years. So they're going to keep the price of oil as high as they can without causing a recession. At least that'll be their intent. And they might not pull it off. But companies like Ford and GM and Volvo and Volkswagen are moving pretty quick. They're going to have EVs for sale by the middle to end of 2026, like en masse. You're going to see most internal combustion engine vehicles at the passenger level, not heavy stuff, but what you and I drive, almost all gone by 2026, 27. If you want an internal combustion engine vehicle by 2027, you're going to pay extra. And I would say that by about that time, because the price of batteries will come down, because the price of oil will still be a little bit tight, because panic pumping may not have taken hold yet, but because the psyche has already ingrained itself in the population from 2022, 3, 4, 5, that everybody's just going to go EVs. When the EVs are about the only thing for sale, what are you going to do about it? Now, I plan to hold on to my Forerunner as long as I can, waiting for the day when oil and gasoline is cheap again, but really it's just going to be a backup car sitting somewhere. I don't have any value to selling it. I might get $6,000 for it. What do I care about $6,000? I'd rather have the emergency vehicle at this point. You take a look at Ford, you realize that all the demand is right here, EVs and pickups. So what are they doing? They're making the F-150 Lightning, right? And people are now doing the YouTube videos and everything else about how these things work. And what we're finding out is that they basically suffer a halving of their range when they pull something big and heavy, but that's about the same thing that happens with a gasoline vehicle or a diesel vehicle. So that's par. But the thing is, did you know that EVs pull better? Because they have more torque. They got instant torque. So the truck owners are like, well, gee whiz, this is pretty awesome. And what are the innovative truck owners starting to do already? Like within weeks of getting these trucks, they're figuring out how to deck them out with solar. So when they're sitting there on a campfire having a beer, their truck is charging. And these things are coming with solar now too. So as time goes by, just think about in your head, close your eyes, and think about 2022 and 2023 and 24 and 25, 26, 27, and how the market's going to look for oil as price of lithium stabilizes, then comes down because there's more supply. Price of batteries comes down because the price of lithium comes down because the technology is just wicked good and getting better. And all the manufacturers are getting rid of the ICE vehicles. What happens? By 2027 or 28, sometime this decade, because the technology will be so good, because the price of lithium and other metals comes down, right? The cure for high prices is high prices. You'll get more supply. Goldman Sachs just came out with a report that showed that the price of lithium could crash. Now, I'm not sure I completely agree with them, but I do think the spot price is going to come down a lot. Why? Law of small numbers. Demand went up really rapidly to the point where the number of EVs on the road is almost doubling every 18 months. Well, it'll slow down, right? Because as the numbers get bigger, it has to slow down. Once the number of EVs is up around 10%, right? They're almost capturing that much in sales already. Once 10% of the cars on the road are 10%, now doubling becomes really hard. And mass adoption begins, and you will see a curve like cell phones, probably not that steep, right? Because it's a bigger ticket item, but pretty fast. And I think that my prediction that EVs will be outselling ICE vehicles by the late 2020s is pretty spot on. I don't think President Biden at this point has to worry about half of the cars being sold in 2030 being EVs. I think it's going to be more like 70, 80%. I think we're going to hit 50% a couple years ahead of that. And as all those gasoline vehicles get old, go to the great compactor in the sky, all these things happen. Prices change. We go back towards equilibrium. And As that process occurs, what are the oil producers going to do? They have their pricing power now and probably next year, maybe even the year after that. But what happens when they realize, where did that article go? When they realize that the price of oil is too expensive for what demand is going to be in a couple of years, they're going to panic pump. So 3, maybe 2, maybe 4, but just in a few years, there's going to be a lot more oil hitting the market. That'll drive price down there too. What does that all sound like? It sounds deflationary, doesn't it? And we know that demographics, right? Slow growth, global economy forever. The sustainable slow growth, global economy forever. Slow growth economy forever. Slow growth forever. Whatever I've been calling it for 10 years now. We know that the demographics are the big driver. So here I want you to think fractally now. I took you through a timeline. I want you to think fractally. What's fractal? That is the smaller cycles within the bigger cycles within the giant cycles. So your secular trend is your gigantic cycle. That's the thing that changes generationally or over multiple generations. And then you have shorter term cycles measured in years instead of decades. Then other cycles measured in terms of quarters, sometimes months. So what do the cycles look like here? The giant cycle is a move towards clean energy and sustainability. We use technology to do that. And by adding to the supply chain for materials. As we add to the supply chain for materials, prices come down. As technology is better adapted, prices come down. As the population ages, the economy slows down. It drives prices down. As the boomers finally start to die, or at least move to retirement communities and out of houses, real estate starts to flatten out a little bit. You know, remember something about the long-term history of real estate. Basically is a 2 to 3% annual appreciation. The appreciation that you've seen on real estate in the last 20 years both had to do with hot money and then the pandemic. So 3 really weird things happened this century so far. We had hot money pouring into real estate before the financial crisis, all kinds of leverage money. Then we had the age of QE. And then the pandemic made people think that everything is going to be remote work forever. And it turns out, probably not quite true. A lot of the big companies are saying, hey, we need you in the office 3 days a week. Or as Kevin O'Leary, right, Mr. Wonderful talks about, you can probably go somewhere and work for a week or two, but at least once a month, you're probably coming into the office for like a 3-day set of meetings and face-to-faces, maybe 4 days a month, you know, just flying in for a week. That's happening. You got Elon Musk basically telling people they're lazy if they don't come into the office and he's going to fire you if you don't. Musk is just getting weirder and weirder, right? So either he's trying to do what he's doing by being inflammatory and over the top, right? There's no middle ground with the guy. Yeah, I'm sure that has a lot to do with his success. However, I don't think there's any denying that he's a dick. The kind of guy that if you were drinking with him, you'd probably punch him and knock him out, except that you realized he was going to pay at the tab. So you let him act like a jerk. I don't know. So all these things are tied together from what? Climate change. In the Midwest, we're facing all kinds of big problems. We don't have the wildfires, although Michigan has wildfires, which is weird, right? So surrounded by 3 hunks of water, 3 hunks of water, and they have wildfires. But we have the potential for our agriculture being really disrupted. Well, that's one of the major breadbaskets in the world. If you ever look at Drought Monitor, you take a look at the weekly weather and crop bulletin, what you realize over time, and I don't look at those every week, but I do look at them at least once a month, probably more in the summer. What you're realizing is that we've really screwed the pooch on climate change. So the reflexive actions of the governments are going to get more severe. You're already seeing laws in California and Europe that require solar on new constructions. I've told you for 2 years that was coming. All these things I've been telling you, especially since CES 2020, which just blew me away. It was a weird CES. Normally there's 1 or 2 big ideas and everybody coalesces around it. There was like 6 big ideas at CES 2020. Blockchain, climate change, all the EV concept cars, the drones, right? We just all the fourth industrial revolution stuff. Just unbelievable. And I'm going to say something to you now that's going to be an article title, and I can show you that because I started writing the article a very long time ago. I'll do that later. but the article is titled, How I'm Going to Take Climate Change Deniers' Money. At some point, might be years from now, at some point, I'm going to clobber them on short positions. Might have to do it intermittently, let things get overbought, and then short them down halfway, let them rebound, then short them again. For those of you who trade, I categorically tell you that there is an army on Reddit that is ready to destroy the oil traders. And the funny thing is they wrote it on the upside, and along the way they learned how the system works, how to trade options and use margin, took their lumps, they learned, same way I learned at the poker tables, I lost a little money. And now these millennial traders and even some of the younger people, even some of your 20-somethings, they're such good traders that you're going to see a wave of destruction in fossil fuel investments. A wave of destruction. May not happen just yet, but it's going to happen. And when it does, it's going to be way worse than you ever imagined. It's going to be just like when all these companies went belly up in 2015 and 16. And it's going to be because of a combination of several things. One, that they understand the supply and demand equation is changing for oil and gas. And as alternative energy comes on, which is going to take time, the markets are going to argue, and you're going to get your trader narratives. And your trader narratives are going to be thumping their chest, right? Trying to tell you, buy oil, buy this, buy that. And it's going to be freaking spectacular. When I tell you that I think I might be able to make $100 million on that move, I'm not joking. I might lose $1 million. I might make $100 million. Pretty good bet. I got a shooter on my side. Oh, something about my trading, just as an aside, before I run through the Global Trends ETF. I've been laying all this out because it's where the Global Trends ETF portfolio comes from. It's from understanding the secular trends and then the cycles within the secular trends. So if a cycle is going up today, but it's in a secular trend that's heading down, what's the next thing that'll happen? It'll go down, and it'll go down lower than it went before. And if the secular trend is up, but the cycle is down for something, that means it's eventually going to turn back up, and it'll go higher than it did before. So think of a channel up and a channel down. The short-term cycles can move against the channel for a while. But then when it heads back down in the same direction as the channel, it sets a new extreme, either to the upside or downside, depending on which direction the channel is going. Does that make sense? I hope so. So when I tell you for a year to buy small caps because they are obnoxiously oversold, and a lot of them have gotten to the point where they're basically being told they're going bankrupt, what's the only question you have to ask? If something is priced for Armageddon, what is the only question that you have to ask? Is it going to hell? If the answer is no, you buy it. You stop quibbling about a quarter or a buck. When you can invest in companies in trillion-dollar industries that are priced below what their funding rounds were when they were, private equity investments, right? When you can buy this stuff for cheaper than the early investors, all you have to do is ask, is it going to be around in 5 years? And if the answer is yes, you're going to make multiples on your money, 2, 3, 4, 5 times your money, probably, sometimes more. If you make a dozen of those bets and you have reasonable intelligence, 101 IQ and up, 101 IQ points. That's a pretty neat, maybe Disney will make a movie. 101 IQ points. If you got 101 IQ points, right, it makes you above average. And you can get, let's make this like dentist. 4 out of 5 stocks are going to still be in business that you think will be in business. And 1 goes to 0, but the other 4 make multiples, right? Pretty easy to figure out that you just crushed the market. Probably doubled or tripled your money, even though one of them went to 0. Now, we don't have many stocks go to 0 here. I had a couple of oil stocks and gas stocks get real close before I dumped them. And on track, I dumped on track around $2 or whatever it was. Switched to the preferred shares. I haven't even looked at those in weeks. I take that back. I saw that common went up a little bit. I don't know why. They got a bailout loan or something. That's real hopeful. I still think it's a take under. Preferred goes to par, but everything else goes to 0, or it doesn't go up. That's if somebody like Adobe really wants them. In any case, all my years, only having a couple of stocks really kicked me in the butt. You ask yourself, on these small stocks, where I can buy them at the same price as the private equity investors and the angel investors, the other early investors, how do I analyze those? Well, if the secular trend is on their side, government policy is on their side, and their balance sheets are fine, and they have access to capital, and there's parts of the companies that the market doesn't assign any value to, meaning that you have a huge margin of safety. Just got to ask, are these companies going to be around 5 years? If the answer is yes, you buy them. You just stop asking the question, can it go any lower? The answer is always yes. And the answer is just always have a little extra cash to invest if it does go lower. And space out your purchases 20, 30% in most cases on stocks. Funds, it doesn't have to be that wide, right? Because you're getting a basket. So you have a little safety from the diversification. Not much, but a little bit. So let's take a look at Global Trends ETF. But first, just want to remind you, this major markets risk on, risk off report. I am taking this from Fundamental Trends, where Shooter writes it, and I am combining it with my analysis. So the one on Seeking Alpha is a little bit more circumspect, and I'm going to be publishing this on the free side. There's not really any trades here per se, right? It's just discussing SPY and QQQ and TLT. And I think it's neat that a day after, 2 days after this comes out, a couple other people came out with articles talking about there's going to be a rally in TLT. That's what I just said. And I've been telling you for months, probably was going to happen later this year, right? When the Fed backs off, or when people think the Fed is going to back off. Got a question. Let's just have a little fun here. Do I need to tell you what a great student I was and what my awards were? How I was always the smartest at my company and at my school and my Cub Scout troop? Do I really need to tell you things like that? And then follow it up with, hey, this thing is going to go up for a while, and then it's going to go back down. And then it's going to go up again, kind of in this rough time frame. And I don't know why, but my magical trading system says why. It'll be close, might be right. And if it's wrong, there was something else going on at the time that no system could have figured out. So my magical trading system is still as good as anybody else's trading system. And it's probably better because, hey, like I told you, I was the smartest Cub Scout. I like making fun of people like that. Not that they're not sweethearts. Sometimes arrogance and a borderline ethical standard, which prioritizes me over everything else, it's a chink in the armor, right? That's how the bad guys always lose in the movies, right? Arrogance, questionable ethics. But if you have any ethics at all, you realize there's probably a better way. Sales and marketing and finance and everything in the world suffers from the same ethical dilemmas. Should I sacrifice some ethics to sell another subscription or another car or another house, another blacktop or another roof? Can you tell I've been working with contractors? I want you to think that stuff through when you read some of these articles from me and from others. If you figured anything out about me, I'm a pretty laid back guy. I have a little chip on my shoulder because the less ethical people piss me off. But truly, I don't give a shit about a lot of things. I care about my family, care about my friends. I care that we're burning up the planet and killing off species by the dozens. And I mostly care about the kids who get screwed by it all. But I'm not going to lie or bullshit or snow you to get an extra subscription. I don't need to. Not for my ego, not to make money. I grew up in a place where everybody was pretty equally middle class or poor. And I know the system's a little bit rigged against people that don't start out halfway up the rope. So I try to help out by explaining this stuff the best I can, the best that I know what's going on. And I repeat myself today because I know some of you have heard this before because we have, I was like 40, 50 new people. And I don't know if you're going to stick. I hope you do. So I think it'll be good for you. But if you leave, good luck. I think it's important that you understand this lesson because you're getting so much shit poured into you by the media who doesn't understand things. And a lot of them do have agendas, and a lot of them are bought and paid for. That ruddy-faced guy on Fox, and that guy just comes out and lies right at you. He makes money doing it. I've told you a story about how Breitbart tried to hire me to be a climate change denier. I told Steve Bannon I wouldn't do it. He was the last guy I had to talk to. And he pretty much came right out. And all the stuff that they were dancing around until the fourth interview. Can you tell the people that climate change is a hoax? No, you fuckhead. That's not how I put it. It's what I wish I would have said. Look, there's a lot of things in the world changing. Some of them are so slow that it's imperceptible. But if you take a step back and you look at the data and you look at what's burning, you look at what's different, you talk to a farmer, then you ask an executive who has to deploy the capital on what he thinks is going to be most profitable for his business, what you start to realize is these secular trends are so powerful that no short-term cycle should be looked at as a reason to stray. When clean energy investments drop in price by 50, 60, 70%, that's a time to buy, not a time to sell, because their growth rates are among the highest in the world, and you want to buy them cheap. Relative performance is how you get rich. Now, you can trade to add a few points a year. If you're a shooter, it's a ridiculous amount, but I add 10, 15, 20 points a year just by selling those covered calls and mostly cash secured puts at the right times. Combination of fundamental and technical analysis. You can do it on stocks, you can do it on ETFs, and you need to embrace it. You need to throw out a lot of the shit that you've heard and you felt and you thought. If you want to beat the market, stop thinking like the market. Be somewhat contrarian. Now, there are definitely waves that you want to ride, but most people mostly make bad decisions because they're driven by emotion. Understand the big secular trends. Understand government policy and central bank policy. Don't buy into narratives that are, well, this just must be true, because a lot of times it's not. The biggest fake narrative out there is that the Fed caused inflation. They had almost nothing to do with it. OPEC, China, and Russia are causing inflation. That's an article that's coming out before I go to Vegas. All right, so in the Global Trends ETF, I have my forecast, which I've been talking about. So read that, right? Asset allocation. Determine how much you're going to have in cash in the short term. Determine how much you want in ETFs and stocks in the long term. Most of you should be about 50-50. If you're a little more conservative, maybe you go 75% ETFs and 25% stocks. But even if you're a little more conservative, I'd probably still go 50-50, and I would just buy, more dividend paying large cap and mid cap stocks. Although right now the big opportunities in small caps. So I changed the chart to make it a little bit easier to use. Current asset allocation, target asset allocation. And this applies to the part of your portfolio that you'll have in ETFs. So if you want to be half ETFs, right now, you might only be 11% invested in ETFs. Why? So let's take a look at this. For your growth investor, if the range on QQQ is 12 to 25% of your money, you're only 4% now. That means that you're looking to do some buy-in with that cash. Same thing all the way down. Berkshire Hathaway is expensive. I trimmed a little, a few months ago. ARK, I've been trading a little bit. Some of you have been on that with me. PBW, I own. You could substitute QClean if you want. Or if you lost money on PBW, sell PBW, capture the tax loss, and then just buy QClean. Right? It's a different fund. It's not the same thing. It's not like buying the same stock back. So there's enough similar ETFs that if you have losses in ETFs because just the trade didn't go your way in the short term, you can actually get around the wash rule by swapping PBW for QClean or vice versa. And they perform basically the same. Not in semiconductors right now. The cannabis stocks, you can go global, or you can focus on the US. Small asset allocation, but potentially, doubles the market or triples the market return on the next upcycle. Emerging markets with China, without China, and then TLT. Sometimes you own none of it, sometimes you own some of it. Right now, none, because it's getting beat up. But this might be a really good trade sometime later this year. And I talked about that in the major markets article, right? In the major markets article, I talked about TLT and where it could go. So if the Fed backs off sooner because they're worried about growth, we're really close to a buy point. But if inflation stays hot and the Fed has to stay aggressive, there's another big leg down on TLT. We'll just have to figure it out. Just keep an eye on the numbers. If inflation comes in hot over the summer, then the Fed probably has to stay tight until later in the year. December, maybe. The last big flip-flop Powell did was a December to January flip-flop. I think it's going to be earlier this time, but maybe not. So we have all of our funds. And then, to really make your life easy, I put in a chart of where I would buy. Now, this is a little bit, flexible because times change, but the charts are pretty standard. I stretched out the QQQ chart to just show you something. I know this doesn't exactly follow the rules of Elliott Wave, but look, from the bottom in 2009, basically went up, some flat periods, had a correction in 2018, went up, correction in 2020, went up. This is a 1, 2, 3, 4, 5. So we're supposed to get 1, 2, 3 to the downside. In December, January, February, when certain Elliott Wave analysts were telling you that we were about to set new highs, that the pullback would be much more shallow than it's been, It's because Elliott wave and a lot of other technical analysis breaks at the edges. It only works in the middle. Quantitative analysis is what catches these pivots. I predicted this one. Actually predicted this one here. At the start of 2018, we bet on volatility to go through the roof. Some of you were with me at the time, made like 600% on that trade. I don't trade often, but when I do, I'm trying to hit home runs. Got that one right. I started scaling in a little early, but didn't matter. I actually called the bottom day, Christmas Eve. So it was like the 21st because I think Christmas Eve was a Monday. That Friday, I said the market's going to bottom out on Christmas Eve on Monday. Make sure you're buying stocks on Christmas Eve day. Some people did. Most people waited a few days, probably got it way up here. We bottom ticked that to the day. I was off by a week on the COVID crash and certainly didn't scale in fast enough. I didn't get mostly invested until, September, October. But the stuff that I did pick out, Tesla, Bitcoin, over that summer, did pretty well. End phase, right? You can see the list. And as we went through all this, I told you up here that it was going to turn over, and I told you why it was going to turn over. And on the way down, I told you what the Fed would do. And now I'm telling you what the Fed is going to do again, and I'm only going to be off by a couple months if I'm off. But I do think it's kind of interesting that when I said the Fed would back off in September, the Atlanta Fed president, Bostic, came out and said the same thing, 3 weeks later? How do I do that? It's not actually that hard. You have to believe the right underlying things. You have to believe in the secular trends by understanding what's going on in the data and the policy and the CapEx decisions. If it's not getting money, it's not going to happen. If it is getting money, it is going to happen. But if you really want to know why things are happening, follow the money, right? Follow the money if you really want to know what's going on. CapEx, follow the CapEx. We talk about CapEx all the time, right? How often have we talked about CapEx cycles? Over and over again. In small caps, they get beat up because people don't understand that on the front end, there's going to be high CapEx. Then the growth will catch up, and the growth curve will bend upward, and the CapEx curve will bend downward. When that starts to happen, the stock goes to the roof. Because first you get your early investors, your smart investors, your sophisticated investors, and then you get the madness of crowds chasing on. I think you're probably going to see QQQ come down into here. This peak here in 2020, pretty important technical level, right? Right around 240 on QQQ. If we break through that, we're heading for the Armageddon zombie apocalypse. It already have been pretty bad at that point. I think the Fed's going to try to hold the line there. That's why, as tough as some of them talk right now, and as dovish as a couple of the other ones talk, it's all about creating uncertainty. What happens in uncertainty? You get volatility. What happens when you get volatility? People panic and sell. They pop the bubble. So if they can get down into this area, just chop off this part of the ice cream cone, they've popped their bubble. And then maybe we get some choppiness before it ramps back up into the 4-year presidential cycle. BlackRock Science and Technology Trust, I just wanted to point this out for retirees. It basically performs like QQQ over longer periods. It'll trail, then it'll lead, it'll trail, then it'll lead. It has to do with how the options get written. But if you want a QQQ-like total return that's got more income, that pays monthly, you buy this. I think that this is probably the best growth and income vehicle for retirees out there in an ETF or closed-end fund or anything, right? This is actually a closed-end fund. Berkshire Hathaway doesn't pay a dividend, but retirees should still have it because it's the safest stock on earth. So I treat it like an ETF because they have 30 stocks, 40 stocks they own, and then like 100 operating businesses, Dairy Queen, right? So every time you go for ice cream at Dairy Queen, I don't because I got better ice cream places. If you go to a Dairy Queen, just think Warren Buffett. Free one of those little candies that they have. I forget which one it is. C's candies. I actually saw a C's candy store here in a mall, which means nobody went, but it was there. Invesco Next Gen 100 mid caps. Then ARK Innovation, which is all cap, but good slug of mid caps. And this is a fund, ARK Innovation, that you can trade a bit. You can trade them all a bit. We probably don't want to trade the entire positions. Not once you're fully invested. Your 2 clean energies, semiconductors, cannabis, emerging markets. Went through it all now. So you take a look at some of these charts. They all kind of have a similar shape, right? QQQ. If we shorten this up, right, get it up to 2018. There you go. Look at that. That chart. Berkshire breaks the mold, but even they're pretty far off their high. And this might be too low. I'd be very inclined to buy this at the top price because if it goes lower, they're just going to buy the stock. So I don't think you need the bottom fish on Berkshire Hathaway. That's probably the only one I'll say that about. PBW, I've been trading a little bit. I think it ultimately has one more leg down. Does it stop in here, down here? I'm not sure. Q Clean, same deal. TAN, same deal. TAN is easy to trade. So if you want to add a little swing trading, I'm going to cover TAN in the weekly updates. I think you just overweight towards semiconductors if you get a chance to buy in this just above the high of 2020 range. They power everything, right? Semiconductors power everything. YOLO, just beat the heck. They're not going to quit smoking. So that market is coming to equilibrium. I think it's already undervalued. Just needs a catalyst, whether it's a good market or a piece of legislation to shoot it up. Probably not a good way of saying that with a drug stock. This is the U.S. based one. There's more money to be made in the U.S. market, but it's going to be more volatile. Although, I mean, seriously, if you take a look at these two, they're not much different, right? They're basically the same. You can use either one. I think maybe the U.S. one has a little bit more upside, but this is another way to, if you're down 30% on YOLO, sell it, take your tax loss, right? If you're in a taxable account, switch into MSOS. Easy enough. EMQQ looks like it's in the jitterbug zone. I think you probably get one more lower leg, maybe two. We'll see. The COVID zero stuff in China is very scary. I just use this as a proxy for Alibaba. If you really want China exposure, I think the way that I would do it, or I'm going to do it, is I'm going to buy FMQQ, which is basically EMQQ without China exposure. I think I'm going to get it in single digits. It was almost there. And then I could take FMQQ and then, get a 3% position in Alibaba as my proxy on China. I think Alibaba is the best stock in China. And ultimately, I think it's the one that the government has to let rise. We'll see. It's hard to invest in China because you can't trust them. Okay. Oh, this is the article that somebody sent from earlier. I showed you that already. All right. Last thing, Shooter's primary waves. This is an update he does every week at Fundamental Trends. I am moving it over here, and I put in a little bit of my own commentary. I take out the stuff that I don't really think the position traders need. But I will tell you, Square is shaping up to be my favorite mid-cap stock, or my favorite large cap that's not a mega cap, right? You got those 200 stocks that are, 200 billion and up. I really like what Square does in small business. I like what they do online. And I really like that they own a bunch of Bitcoin. So if you don't want to buy Bitcoin and you want to own a stock of a good company that has Bitcoin exposure, I think Square is the one. And here I would talk about several stocks on Monday maybe, but companies that have an operating business or several operating businesses like Berkshire Hathaway, and then they take that cash flow to invest into other businesses, tend to do very well. So Square has a couple of other businesses they're invested in. Excuse me. I'm drinking about 6 glasses of lemon water today so far. Getting serious about this weight loss thing. I'm going to walk every day in Vegas. I've been walking every day with the dog. He's confused. Palantir, right? Operating business. They have 2 levers they can pull that we'll talk about on a Monday to make them very profitable. And by the way, they have investments in over a dozen small companies, including Black Sky. So as those rebound, right? Everybody's basically got their investment portfolio as a negative. Well, at that point, it's free money, right? If I gave you 12 stocks for zero, can't do any worse. Maybe something goes up, right? Square, the extra thing here above their operating business is Bitcoin, and the stock is just beat the heck, right? All the way back to 2018-19 levels. It doesn't make any sense with them making so much money and having all those assets. Could it go down a little bit more? It could, but it looks like it just double bottomed. Maybe it'll triple, make a W, then just to the moon again. I will tell you, I think that Bitcoin is still going to 100,000. I think it'll happen by next year. And ultimately, I think Bitcoin is 300,000 to 500,000 later this decade. And I'll cover all that for you. So I want you to have exposure to Bitcoin, even if you're not buying it yourself. The last time I pounded the table on this was summer of 2020, and it's in the 20,000s again. Start scaling in. I dollar cost average it into both Ethereum and Bitcoin every month. And every now and then I buy a little extra on some really bad down day. So I bought some extra at like 28 grand a week or two ago. If you're going to buy Bitcoin and Ethereum directly and you have extra money in the bank, that's the money to use. Use your brokerage accounts to buy stocks that have exposure. There's a small cap stock that I just started buying, and I'll recommend that here shortly. Remember, here's one of my famous hints. Remember, the financial system and finance and investing is a marathon. All right. One of the things that you're going to hear me start to say more and more, so I'll say it right now, is once we get through this period here, this choppy period of the Fed popping the bubbles, and as the energy system catches up, there's going to be a mega boom economically in the United States and a few other countries. India, I think, too. And it's not going to last a year or two. It's going to last a generation. As we rebuild the world to be more sustainable, as we allow technology to help us not fry ourselves, you're really going to see certain businesses do really, really well. That's where we got to be. Fourth industrial revolution, sustainability, that is absolutely where there's the most money long term. So you're going to want to buy the dips on those. And in the secular declining areas like fossil fuels, you want to sell the rips. So buy the dips on sustainability and sell the rips on fossil fuels. There's only a handful of exceptions to that. Gas pipelines, green hydrogen plays, biofuels, right? Anybody adding refinery capacity, that's interesting, and especially when they get tax breaks. Government's on their side there. But energy is something I've been investing in since the 90s. And I'm telling you, the transition is on, and it's the Wild West again. And that means there's a lot of risk, but the opportunity is through the roof if you can get outside the narratives. If you can get outside the narratives, not believe things that aren't really supported by the data, even though they get repeated over and over again, and they tie into certain people's ideologies, right? And on the surface, they seem like they could be true. But remember, every good lie has an element of truth. And that's where the fossil fuel industry lives. So when I talk about an LNG company that can make LNG on the water, or when I talk about a biofuels company that has created a virtuous cycle with agriculture to basically have zero carbon fuel, diesel fuel, jet fuel, natural gas, right? Zero carbon footprint, because they're taking out as much carbon from the system as they're putting in, or gas pipelines that are basically right on top of the best carbon capture caverns in the world. I don't hate energy investing. I'm just telling you that the oil stock investing is hard to do because you don't know when the panic pumping is going to start. And you don't know when Saudi Arabia's king or crown prince or whoever's in charge over there is going to wake up one morning and say, yes, we will take the deal for weapons and protection and bribe money and pump you more oil. There's a meeting with President Biden and the crown prince in Saudi Arabia in 2 weeks, by the way. All right, everybody have a great night, and I'll talk to you again on Monday, and keep an eye out for more stuff.